Hey, everybody, this is Rich Hayden with Hayden Home Mortgage. I want to walk you through this concept right here that we have that we call Know Your Math. And it's really important. Forgive my eyes, I'll be looking at the screen, but it's really important when you're considering, what mortgage options you have, a variety of things. One, how much money do you have to work with overall in terms of a down payment? And I would classify that just differently. What is your access capital? So the money that you're going to use to access this property. So that money is going to cover in part down payment. It's going to cover closing costs. It could cover points. And then you likely are going to want to hold some of that money back so that you can move. So you maybe have some improvements you want to do to the property post close, or you simply want to leave some money in the bank. So, what I'm going to look at here for you is a fairly typical scenario that we're seeing in our market in Northern Virginia today, which is about a $700,000 purchase. And I've got a client, let's say, that's got anywhere from $100,000 to $140,000 to work with for a down payment. Now, they may be in a move up situation where they're selling property A and they've got some equity coming out of that, or they may have been very good savers and they're liquid to that level to have that $140,000, let's call it. So the conversation that we always have is what's the best and highest use of those dollars and how many of those dollars do you want to use? And so, a lot of times it'll be, well, $140,000, that's 20% of 700,000, but then I don't have everything to cover the closing costs. And so, okay, well, let's back it off from there. And then it usually starts with, well, I want to put the biggest down payment down that I can so that I can try to avoid mortgage insurance. Well, you don't have to. It's not the end of the world if you have mortgage insurance. Or so that I can have the lowest payment possible. Again, higher down payment doesn't necessarily mean lower monthly payment. Okay. So you can achieve a lower monthly payment through a little bit of work and really kind of digging into your math. So, how are we going to do that? So, the typical way we're going to unhighlight these things is say somebody does, I'm going to try to maximize my down payment, get 140 grand to work with. Let's use as much of that as we can to drive to the lowest payment. So I'm going to get there, right? I'll get to 3,600 bucks a month with that by putting 15% down, paying 1 point and covering my closing costs. I'll spend 133 grand in order to get that. And I'll have $7,000 left over. Okay. Now, what's missing is the principal, is the taxes and insurance on this property. So we're just doing a kind of a baseline of that. Okay. Well, what if I don't want to use all that money, but I want to try to achieve a low payment? Well, I can do 15% down and pay 1 point as opposed to 2 points over here. I'll be, 170 bucks higher on a monthly basis, but I will have $6,000 more in the bank. That's not moving the needle that much in your favor, but it will, be of benefit. But note the difference here. It's a pretty big swing, right? By paying those 2 points. Now, what if we said, hey, I actually want to put 10% down. I want to try to keep 40,000 bucks in the bank if I can. Okay, put 10% down, pay 2 points, which is prepaid interest on the back of the loan. What that does is it just brings the interest rate lower. And that interest rate will move down to 5.976%. Okay, now we're getting somewhere. My monthly payment, all in principal, interest, and mortgage insurance, again, taxes and insurance, we don't know, would be $38.45. And what's key to note here is that's a $51 a month difference from this 15% down and 1 point. So that is what we're calling that a $28,000 difference between those two. And I'll pay 51 bucks a month more, but I'll have $28,000 more in the bank. And I'll actually achieve that $40,000 left in the bank post closing if I do that. Is that worth $51? Maybe. That's up to you. And then finally, the last piece of this is, hey, I'll put 10% down and pay 1 point, and I'll have the highest payment on all these. The end of this exercise, what it should show you is that there's so many different ways to get to your number, right? You could achieve with 2.5 points, or even 3 points paying to drive your interest rate low enough, right? You could actually get to your payment here and still have, another, what if we another $35,000 left in the bank, and it would be as though you had a 15% down payment plus 2 points. So you would have more money left over doing for you other things. So let's do the math. If you find this helpful, or if you have some questions about it, or if you want to, pick my brain about your individual scenario, let me know. I'm at 703-957-0790. Look forward to helping you in soon. Bye-bye.